Hello and welcome back to the Crypto Club podcast. We are on episode 8. And of course, as always, I am Gons and co-hosting with Hobo. Say hello, Hobo.
Hello, hello. Yeah, I'm pretty sure this is episode 8. This might be episode 9. But anyways, we'll see when we upload it.
Is it 8 or 9?
Yeah. Quite the eventful week in crypto. Things are looking ugly, to say the least.
Hobo sold all his Ethereum.
Sir, sell low, buy high. That is the winning strat, as you all know. You can see ever since we broke that 0.65 line on the Fibonacci, it's just been days of red, down about 20% in the last 3 days. ETH went all the way down to, see, about 14.25, which is roughly what it peaked at in 2018, which is terrible. We're down about 3x from all-time high, a little bit more than that. Just hanging in there. Don't get wrecked. Always have some money on the side. But, the pain is being felt for sure this week.
Oh yeah, absolutely. And hopefully we hold above that previous all-time high from 2018, like you said.
Right.
Other than that, it's just sideways until the bull run comes around and the macro improves overall.
Mm-hmm. Yeah, I think the largest catalyst for this pretty big dump that we've had has been the CPI coming in higher than expected. Right here we've got this article talking about the consumer price index, and it's basically a inflation data for the average consumer. People were saying that likely in April we were seeing the peak of inflation at 8.3%. So people were expecting lower than that. And then May came in at 8.6%, showing we still haven't reached peak inflation. Who knows if June is going to be even higher. But yeah, really, things are going super south for the average consumer. It's interesting, right? Like, while prices of the cost of living are skyrocketing, price of equities and assets and crypto are tanking. So really, like, while inflation does mean prices go up, if you use these periods of inflation to your advantage, you can come out on top in the end.
Yeah, that's a few good points you brought up. So the smart thing to do is to ride the inflation wave. In other words, accumulate assets that are also rising with inflation. And yeah, it is insane. The reality is, like you said, we haven't reached the peak yet. I was doing a little bit of research on this over the weekend, and it turns out that when they're calculating these shifts or these percentages for inflation, it's actually not that accurate. There's a lot of very outdated methodology behind how they calculate it. And there's whole videos and stuff that go into it. I won't go into like exact detail.
Right.
But for example, the way they calculate CPI, the consumer price index, is just your average like cost of goods that, your bare bones essentials, right? You're not going to calculate, how much your Jordans went up with inflation, because it's not like it's a commodity. It's not like an essential product.
Right.
So the issue with how they track CPIs, however, is that, so what they do is, they're tracking goods, for example, at the grocery store, like a loaf of bread, or cookies, for example. So let's say you're buying a loaf of bread and, last month it was $2 and this month it is $3. You would see an inflation there, a gain of 50%. Right. However, what they do, which kind of suppresses that value, is if there is like an off-brand loaf of bread available for $2, then they will completely negate that inflation 100% on the on the spreadsheet.
Right.
So they'll say the loaf of bread is $2 and it's still $2, even though what you're actually losing is quality.
Sure.
And in these times, the other thing that's happening that a lot of people aren't aware of is it's also called shrinkflation. And what it is manufacturing. And businesses, instead of raising their prices in order to remain competitive, they lower the quantity that you get. So, typically you might get 20 strips of bacon in a bacon package. You may start seeing 19 or, and you may not realize it unless you're really paying attention, but that's one way that, also on paper, bacon price is still the same. Yes, technically, but in reality, you're getting less for that money. So it's still an inflation issue. Right. Just it's pressed by that CPI metric and how they calculate it.
Yeah, and something else worth noting, is they've changed the way CPI is measured several times throughout the history of the CPI being created, and so you've got this chart that just doesn't have consistent variables because the methodologies have changed. So, you're obviously going to get some
discrepancies.
Yeah, some discrepancies.
Yeah, there's a lot of nuance. Like it definitely shouldn't be used as any sort of like real metric. Because it's just more like a guessing game based on the research I did on.
Right. Yeah. So let's just dig into this article a little bit here. So, U.S. consumer inflation in May reached its highest level in more than 4 decades as surging energy and food prices pushed prices higher. The Labor Department on Friday said that the Consumer Price Index increased 8.6% in May from the same month a year ago, marking the highest reading since December 1981. Economists surveyed by the Wall Street Journal had expected the Consumer Price Index to rise 8.3% in May. U.S. stocks fell sharply. The Dow Jones Industrial Average fell around 2.7%, or about 880 points in 4 p.m. trading. Technology shares slid along with banks and consumer shares, sending the S&P down 2.9% and the Nasdaq Composite down 3.5%. Markets had been on edge waiting for Friday's inflation figures. Heightened inflation is likely to put pressure on the Fed to lift interest rates quickly in an effort to temper rising prices. A fresh inflation shock hammered stock and bond prices in anew, heightening investors' fears that the Federal Reserve could be forced into a more drastic action to tame surging consumer price increases. Declines hit across the board, with rising interest rate expectations increasing worries about the possibility of the economy slipping into a recession. The Dow Jones Industrial Average fell around 2.7%, or 880 points, in 4 p.m. trading. Technology shares slid along with banks and consumer shares. Investors also dumped U.S. Treasuries, driving the yield on the 2-year note, which tends to climb with investors' expectations for interest rate increases to its highest level in more than a decade. The move came after new data wounded investors' hopes that easing supply chain bottlenecks and rising borrowing costs could help precipitate a relatively rapid decline in inflation over the summer without the Fed needing to signal more aggressive interest rate increases than already anticipated. Heading into Friday, various market gauges had indicated investors expected the Fed to raise the target for its benchmark short-term interest rate by 0.5 percentage point next week and in July. After the report, investors priced in another such increase in September, and speculation about a 0.75 percentage point increase as soon as next week, a step the Fed hasn't taken since 1994, was renewed on Wall Street. So yeah, not looking great for the economy. I'd be surprised if this didn't have a hawkish effect on the Fed's actions. You can see here, gas is nearly at $5 a gallon on average nationwide. I know where I'm at, I'm about paying $6 a gallon typically.
Man, it's crazy. And when you put it in perspective, like there's a lot of people that were about $4 like a year ago, and now everybody's wishing for $4 again.
I know. Yeah, California's like, I want to say I've seen like $8 or $9 Pretty nuts.
Should have longed gas.
Yeah, for real. Not the Ethereum guys. Let's see right here. It talks about crypto. Bitcoin and other major currencies followed stocks lower Friday after the latest inflation report showed prices surged to a new 4-decade highs in May. Bitcoin declined 3.8% to 28,990 in the early afternoon, while Ethereum slipped 7% to 1676 from their 5 p.m. levels on Thursday. The global market value of all digital assets retreated 4.3% in the past 24 hours to 1.2 trillion, down from a peak of nearly 3 trillion in November, according to data provided by CoinGecko. The cryptocurrency market has been hit by the Federal Reserve's move to increase interest rates, dampening the desire for investors to hold assets perceived as speculative. The recent collapse of algorithmic stablecoin Terra USD further stoked volatility in the nascent asset class and brought stablecoins under heightened regulatory scrutiny. Bitcoin has plunged 35% this year, often trading in tandem with the technology-heavy Nasdaq Composite, which is down 27%. There's little relief for crypto stocks, with Coinbase Global Incorporated and MicroStrategies both tumbling 9% on Friday. When Michael Saylor liquidated.
Man, it is crazy. And that article, I don't know what date it's from, but I mean, we crashed way more. 1968
Right.
So it's just going. I think it's getting close to the territory of definitely being oversold, especially so quickly. But I've said it before: the sooner we rip off the Band-Aid, the better. So it's just kind of crazy to think that it really is the perfect storm to take down like cryptocurrency in the short term, which was Putin, inflation, and Luna, and the collapse of Luna. And all three of those are crazy, and they all happened back to back to back.
Yep. You know, I mean, I don't know, unless we see, China engage with Taiwan or something, really don't know how much worse it could get. We're going through quite a bit, and we're still, slightly above the previous run's all-time high. So, I mean, ultimately, I think that signals strength in crypto markets. They're here to stay. It's not just shooting straight to zero with all of this turmoil that we've seen.
To an extent, I definitely think our strength is being tested right now for sure. Because I mean, we broke the 1500 support, which I personally did not see coming at all. But yeah, I mean, again, rip off the Band-Aid, get it over with. If we go to 1,000, so be it.
Right.
Back up faster.
Yep, it's been a slow bleed. Let's see, it's been November 2021 to June. So about 7 months of just bleeding. 7 or 8 months. Fun times, What goes up must come down, and vice versa. So, just hang on, stay alive, stay cash heavy, and DCA into positions. Don't deploy all of your reserves at once, because no one can ever time the bottom. And yeah, hopefully things can start turning around soon, because I don't think anyone is enjoying this pain. I mean, even the people that are profiting from short positions, etc., they may be making profit from those positions, but everyone has a harder time when the economy is struggling.
Yeah, it's harder to trade in this market too, even if you're doing leverage trading.
All right, well, enough of the doom and gloom of the crypto markets. Let's move on to a leaked copy of the U.S. draft bill showing DeFi and DAOs under regulatory lens.
Ooh, this one's kind of bullish. What I'm thinking of.
Yeah, so the draft bill proposes to eliminate anonymous crypto projects with DAOs, DeFi, and exchanges required to legally register in the United States. A leaked copy of a United States draft bill conquering cryptocurrency started doing the rounds on Twitter earlier on Tuesday. The 600-page copy of the leaked bill highlights some of the key areas of concern for regulators, including decentralized finance, stablecoins, decentralized autonomous organizations, and crypto exchanges. User protection seems to be the primary focus of regulators, with policies intended to require any crypto platform or service provider to legally register in the United States via a DAO or DeFi protocol. This could highly curtail chances for anonymous crypto projects to progress in the United States. Any crypto platform not registered in the country would be liable for taxes, and the definition of DeFi seems vague. The leaked draft bill also tries to offer more clarity on securities laws as they relate to digital assets, a demand that has been persistent from the crypto community and lawmakers alike. According to the Commodity and Futures Trading Commission's definition of a commodity, if there is any debt, equity, profit revenue, or dividend of any variety, then it is expressly not a digital asset commodity. The new draft bill proposes to increase exchange compliance costs, which in turn could lead to an increase in exchange fees. Any protocol or platform that trades a single asset would be categorized as an exchange, meaning that automated market makers would fall under the same category. The bill further ensures that exchanges cannot liquidate users' funds in case of bankruptcy, and adds that they must issue terms of services for consumers to agree to before using their services. The leaked draft bill proposes clear policies to bring the nascent crypto market under the purview of the law. Many experts have pointed out that even though the listed policies seem to encourage strict oversight, it is only a draft. I think that is important to remember. It is only a draft, and we'll likely see quite a few changes to it before anything actually is passed and enacted. I also really like this part right here. Let's see, where is it? Exchanges cannot liquidate users' funds in cases of bankruptcy. A couple episodes ago we were talking about how Coinbase said that they would do that. If they ever went bankrupt, their users or their customers would be considered as uncollateralized lenders, and essentially Coinbase would be able to liquidate their customers' funds and help themselves out of bankruptcy, rendering, essentially stealing the funds from the customers.
Yeah, that's crazy. There definitely needs to be some kind of regulation put in place for that. I believe it's also this same bill where they're basically looking to classify Bitcoin as a commodity, which would be massive. Because at that point, you can use kind of Bitcoin as an overall, I don't know the word for it in law, but it's like when a ruling has passed on like a certain case, that case becomes like the staple to govern.
Just case law.
In a sense, yeah. So at that point, everybody would refer back to Bitcoin not being a security, and it would get the SEC off a lot of people's backs, which, in my opinion, probably be a good thing for the space overall.
Right.
So yeah, that part is huge.
For sure. And I also, I think it's very good to hear that they're clarifying on what exactly is a commodity and what is a security. Really, it sounds like they're just kind of elaborating upon what has already been standard, which is things that either promote or promise a return of any sort tend to be a security, whether that's the revenue share, advertising, next 1000x, things like that. But the clarification is good, as it's still muddy water to tread through.
Yeah, definitely. But yeah, if it brings some clarity to everything and how we treat digital assets, it's bullish for the space.
Right. I would
Although
agree.
It's 600 pages.
Yeah, that's a lot of pages, and I'm sure there's some not so good things squeezed in there, as they love to do.
Exactly. That's what I was getting at. So, who knows what they snuck in there.
Right. Yep, and it is going to surely change a lot by the time anything is enacted. So, nice to get a little preview, but we'll see what actually happens.
Mm-hmm.
But getting on to this next story here, talking about the number of DAOs increases 8 times along with spike in votes and proposals. So the total number of DAOs has increased dramatically over the past 12 months along with their participation rates, but it may not mean decentralized governance is catching on. The total number of decentralized autonomous organizations, also known as DAOs, the number of governance proposals put forward, and the number of votes cast have all seen astounding 8 times growth over the past 12 months. Data compiled by Snapshot Labs, shared by Electric Capital engineer Emmer Caliscan on Thursday in a Thursday tweet highlighted that DAO numbers have increased by 8.8 times from 700 in May 2021 to 6,000 now. The number of proposals has increased by 8.5 times, and the number of total votes has increased by 8.3 times over the past 12 months, from 448,000 to 3.7 million. I think this is really good, a good signal for the technology of DeFi, because we've seen quite some turmoil in the markets over this time span, but people are still really using some of the cool technological features that blockchain makes possible, such as DAOs.
Yeah. Well, I can't remember what sparked the whole DAO movement, but I can definitely agree with the data that in the past 12 months it has skyrocketed.
Yeah, I think, seeing some of the major protocols move on with DAOs, like I believe Optimism has a DAO platform. I think I know Evmos has a DAO aspect to it. So, kind of seeing these larger projects implement DAO aspects surely has a lot to do with this.
Yeah, overall, it's a good use of cryptocurrency. Essentially like validated voting, secure voting.
Right.
So, I personally think it's a good utility, and I think it also, part of the reason was probably because DAOs can be considered utility based in a way.
Mm-hmm.
And so back in the whole, and it's still ongoing, right? The whole SEC controversy / classification of most cryptos as securities. It's good to have some kind of utility, packed into your token or project. So if you had a DAO, that was one way to kind of basically present your project or token as a utility project,
right,
to avoid that classification. So that probably helped a little bit with the adoption of DAOs.
For sure. And, right here it says Caliscan attributed the increase in new proposals to the popularity and wide coverage of Constitution DAO. It was an organization set up last November with the intent of buying an original copy of the United States Constitution. The DAO was outbid at the last moment, but it proved the power such organizations can have. I think that, it surely did play a major part of it. I know that Constitution DAO got listed on KuCoin, some rather large exchanges. I saw the founder on Fox News. And that was quite a cool concept. Really.
We need to start a Porsche racing DAO.
Right.
We'll buy a bunch of Porsche race cars.
Then you get to vote on who races it. But according to DeepDAO, PancakeSwap and Decentraland are the top DAOs by proposal count, 3,300 and 1,200 respectively. Only the top 72 organizations have at least 100 proposals at the time of writing. Despite the overall promising numbers in DAO growth, a Tuesday draft bill from the U.S. Senate could curtail the growth if no changes are made to it. It initially calls for all crypto projects to register with the government and reveal the identities of their users and founders. I don't think revealing the identities of users is going to play out well. That's just not...
That doesn't make sense.
Yeah, that's not what DeFi stands for in any form. I understand the founders and operators of these projects needing to be revealed, but the users I do not agree with.
That doesn't make sense. Like, there's no need for that kind of I don't want to say transparency, because it's not even transparency. That kind of verification, because it's verified on the blockchain as far as this wallet holds this many tokens, therefore they get this many votes. It's very cut and dry, and that's the whole purpose behind a DAO. So there's no need to verify who the user is on the back.
For sure. Yeah, it'll be interesting to see if the whole DAO idea continues to gain steam or if it dies off. Yeah, I think there's a lot of opportunity for DAOs to be implemented, even in like like state voting systems or just institutional voting systems, as they're 100% authentic. And there's not really a way to forge it.
Mm-hmm.
But I'm sure that's far, far down the line. As most people probably don't know what DAOs are. But getting on to the next story here, this one is pretty interesting. So for the first time ever, a U.S. law firm airdrops NFT Subpeona in exchange hack case. In what could represent a landmark legal development for the crypto industry, U.S. law firm Holland & Knight has served a defendant a pretrial temporary injunction as a non-fungible token, acting in a legal case involving its client, crypto exchange LCX. For the first time in history, a temporary restraining order to a defendant has been served via an NFT. So essentially, this law firm airdropped this exchange a restraining order, in that they're claiming that it's legally substantial. I'm sure it could be.
It's gonna go into their OpenSea hidden projects.
Right. So, per the exchange, this innovative method of serving an anonymous defendant was approved by the New York Supreme Court and is an example of how innovation can provide legitimacy and transparency to a market that some believe is ungovernable. So that's interesting to me that the New York Supreme Court already approved the method of airdropping the NFT Subpeona. Pretty cool to see. I don't see why that wouldn't be acceptable, but I just think it's super cool to see that the Supreme Court gave them the okay.
Yeah, it's cool. I mean, it's instant, it's quick, you don't got to track this guy down.
Right.
Blockchain for the win. However, It is kind of funny, it's a little contradictory that they're saying that they are serving an anonymous defendant and then basically saying how innovation is helping make, govern a market that is ungovernable.
Right.
In reality, serving an anonymous defendant, any kind of legal ramifications or paperwork is pointless. But
yeah, especially a restraining order.
Yeah, it's just so funny.
So
but I mean, the idea behind it is cool.
Yeah. So, similarly, Monty Metzger, CEO and founder of LCX, tweeted that the court order marks a historic milestone for the blockchain and crypto industry as a sign of maturity and new transparency. In a statement, Holland & Knight said that the NFT Subpeona was created and airdropped to the defendant by the law firm's asset recovery team. They called it a service token or service NFT. The on-chain process, said LCX, can be found on the Ethereum blockchain. The legal case involves a hacking attack on the exchange that took place in January. LCX said in a statement that the theft wiped close to $8 million worth of crypto, but about 60% of the stolen funds have been frozen. The attack targeted one of the exchange's hot wallets. All other LCX hot wallets and confidential customer data have not been affected and had not been involved in this security incident, according to the statement. Law enforcement agencies from the U.S., Liechtenstein, Ireland, and Spain, which participated in an international investigation, tracked the funds laundered through the Tornado Cash crypto mixer and identified the involved hackers' wallets. Some ETH 500 were frozen under a Liechtenstein court order served by law enforcement in Ireland to Coinbase Europe, and a further USD 1.3 million are frozen by Center Consortium, based on a U.S. court order obtained from the Supreme Court of New York, LCX said. I think that's pretty cool that these guys are typically able to track wallets that these people are cashing out through with Tornado Cash. We briefly talked about the U.S. blacklisting one of these mixer services. It was sort of a more obscure one. Tornado Cash is surely the most biggest common and most prevalent. Maybe that's because it is traceable, and they want people to use Tornado Cash thinking that they're being slick, so they just end up being caught.
That's that is possible. What was the one that they blacklisted?
I do not remember.
I don't remember the name.
Yeah, when we read the story, is the first time I'd heard about it. But yeah, quite an interesting case going on here. Really, I don't think the hacker's going to do anything about this. Hopefully, these guys are able to figure out how to get their funds back. But I'm sure that $8 million of crypto is not nearly $8 million anymore.
Nope. It's about half that.
Yeah, if that.
Yeah.
But yes, very, very interesting stuff here. I think this could be a practice that we really see become a commonality as there starts to be, as legal battles within DeFi and crypto start to become more common. I'm sure we'll see lots more stuff like this happening.
I'm airdropping you. Restraining order.
I will sue you through airdrops, sir.
My lawyer will send you an NFT. Don't you worry.
Wait till my lawyer airdrops you.
You better check your OpenSea.
Right. But yeah, let's get on to this final story here. So Aurora pays $6 million bug bounty to ethical security hacker through Immunify. I think this is a super cool story here. We see read a lot of bad things. A lot of people like to talk about how many scammers are in crypto, how fraudsters and criminals use crypto. But there's much more to crypto than that. So digging in here, over $200 million worth of users' funds could have been at risk if the white hat had chosen to exploit the vulnerability for personal gain instead of reporting it to developers. On Tuesday, Ethereum bridging and scaling solution Aurora announced it had paid out a $6 million bounty to ethical security hacker Pwning.eth, who discovered a critical vulnerability in the Aurora engine. The exploit allegedly placed over $200 million worth of capital at risk. The sum was paid in collaboration with Immunify, a leading platform for Web3 bug bounties, with more than $145 million in bounties available and over $45 million in bounties paid out. On April 26th, Immunify received a report from Pwning.eth about a crucial flaw in the Aurora engine that would have enabled the infinite minting of ETH in the Aurora Ethereum virtual machine to drain and siphon the corresponding nested ETH and ETH pool on Near. At the time of discovery, the pool contained more than 70,000 ETH worth at least $200 million. So yeah, that is a lot of money. Something I'm not sure of if there would truly be $200 million in liquidity for them to drain. They might have 70,000 ETH available, but if that liquidity is not there, it's essentially worthless. You know, nonetheless, though, shout out to Pwning.eth for being the good guy and just taking the $6 million as opposed to the alleged $200 million.
Yeah, for sure. This is a good story if Rapid was here.
Yeah.
Rapid's our CTO, and he's a white hat as well. And that's basically what he used to work in. Is basically doing this for large
Right.
and reporting vulnerabilities to help protect users. So, and I talk a lot with him about stories like this. I mean, I remember the last one was Coinbase, and it was something like the white hat had basically found an exploit that I think it was with Dogecoin or Shiba, one or the other, and it was in the multi-millions, like 20 or 50 million, and they gave like 60K or 100K.
Yeah.
And Rapid was like, man, like, how do you save people so much money and then you get like a small percentage? In reality, he explained though it's beneficial to be a white hat, because if you do steal that 200 ETH, like, one, you're now criminal and you're going to be heavily targeted, and number two, it's a lot easier just to take whatever they give you and be on the good side. It's better for the space in the long run as well.
For sure.
And you're not screwing over hundreds of thousands of users, possibly the whole network, or depends what asset is at risk. But I see both sides to it, right? On the other end, it's like, man, you're giving a guy who saved you $20 million, 200K, like,
Right.
crazy. But
yeah,
definitely would have loved to have had his insight on this story, because he's got a lot of experience.
Yeah, and I mean, $6 million is quite the payout when you consider that just over 45 million has been paid out by these bug bounties. So I mean, that's
Yes, this is
10% to one bounty.
Yeah, surprisingly large. Because again, you usually get pennies for this kind of stuff, and so it really doesn't incentivize people to do the right thing. But I'm happy to see this is at least like a decent payout.
Right. So, yeah, on April 26th, Immunify received a report from Pwning.eth. Let's see, we already read that part. Mitchell Amador, founder and CEO at Immunify, said hats off to Aurora and Pwning.eth for the flawless overall processing of the report. The bug was quickly patched with no user funds lost. Aurora had launched a bug bounty program with Immunify just 1 week before, discovering the security vulnerability. Meanwhile, Frank Braun, head of security at Aurora Labs, commented, "We look at the bug bounty program as the last step in a layered defense approach, and we use this bug as a learning opportunity to improve these earlier steps, like internal reviews and external audits." Though arguably innovative, cross-chain communication protocols have been a prime target of hackers as of late. In February, one of the largest decentralized finance hacks occurred when Wormhole Token Bridge was drained of over 321 million in digital assets after hackers exploited an infinite minting glitch between its wrapped ETH and ETH pool. I mean, I think it's worth noting that I believe the Ronin Bridge hack was about twice as much as this Wormhole hack. But it's just crazy that, we see billions of dollars being hacked. I mean, these are like, before this, the most someone could typically get away with in a criminal manner would be like a bank heist, maybe a couple million. But, in crypto, you see hundreds of millions of dollars flying around. It's insane.
Yeah, for sure. This definitely wasn't the largest by any means, but
right. You either do 100 bank heists and make a couple $100 million, or you just hack one crypto platform from your home. It's just crazy concept for me to think about. But yeah, hats off to Aurora and Pwning.eth. Good to see people doing the right thing in crypto. I think, I don't know, the bad actors obviously get a lot more of a spotlight than the good ones. So it's nice to see a good story in here.
Yeah, positive story to end the day.
Right. Oh, man. I'm seeing, oh, dude, I'm just looking at the crypto prices on the top of this Cointelegraph page. Doge is at 7 cents.
Oh.
Ouch. That hurts. RIP all the people that bought Doge at like 75 cents. What was it? Yeah, about 75 cents. Jesus Christ.
Ouch.
Sol $32. Man.
Yeah, whole market's like really bad.
I remember I bought Sol
Around this price.
yeah, I had taken a ton of losses in my Binance account, and it was like in July I was like, whatever, I'll sell everything, just go all in on Sol, which was like $1,000 or whatever, and then like I bought it and then forgot about it, and a few months later I logged into my Binance account and I was like, oh nice, you know, it's probably about 5,000 or 6,000, just made back everything I had lost. But yeah, some cool stories on Crypto Club today. This has been brought to you by the team at CoinScan, as always. We're going to be getting a massive update soon. Going to have a new user interface, a lot more reliability, a lot more
features.
Going to be beautiful all around. So as soon as that's live, make sure you check that out. If you got any questions, leave us a comment. Don't forget to like and subscribe. If you'd like to talk to Gonz or I, we are hanging out in our Telegram nearly 24/7. So feel free to hop in there and chat with us. That is the official CoinScan. All of our links will be in the description, alongside with the sources for all of these stories. And it has been a pleasure coming at you with Crypto Club episode number 7 or 8.